Good morning and welcome. It's Monday. Gosh, doesn't the weekend fly quickly when you're having fun? So, today we wanted to come in and talk to you a little bit about cash. This week is all about cash. And one of the questions that we most frequently get asked is, "Hey dude," or they're not many people, some people say that to us, "Hey dude, where's my cash?" So, the biggest challenge for the small business owner is that the profit and loss account might be looking reasonably healthy. The bank account sometimes looks reasonably healthy, but the client still feels like they don't have any cash. So they often ask, "Where's my cash?" They're working hard, fingers ground to the bone, and they still don't feel like they have any control over their cash. So that's what we're going to talk a little bit about today.
So as Lisa mentioned, people often look at their P&L and they see they've got a profit, and then they look at their bank and go, that doesn't make sense. I have no cash. Why am I always so
There's a
strapped?"
big difference, isn't there?
Yeah, and they may not understand why there's a difference between the two. And this is typical entrepreneur behavior. Basically, we manage spending from the bank balance. You see what's in the bank. If you got the cash, you spend it. It's simple as. But this is actually a reactive approach to obviously spending, because we're literally going, yep, I can pay for that today. I'll do it today. But we're not proactively planning. We're not preparing. We're not really conscious of where our
Yeah.
cash is going. We're just spending it when it's there. So there's a multitude of different reasons why cash might not have been collected in the way that you would expect.
Or
So
why it's not sitting where you
yeah,
expected it to be.
so it's not there in the bank. Where
Mm.
is it? Well, the first one is that it might not have been collected in the first place. So you might have raised sales, but you haven't actually collected the cash. That one's quite common. Another one is that you didn't raise the actual sales
Yeah,
invoice in the
not billed
first
in the
place.
first place.
Yeah.
That's a big issue that we often see when we start talking to clients about where cash has gone and why they're not feeling as rich as they ought to have done. And you do sometimes find that perhaps they did some work at the beginning of the month and they haven't billed for it yet, or they did some work last quarter and they haven't billed for it yet. So of course they're feeling a bit short on those sales.
Yeah. And basically you're losing out on the opportunity and to the payment terms. Another one is if you've paid old creditors, and I mean you might have forgotten about them. The invoice might have suddenly appeared in your inbox, and you've
Yeah.
gone, yeah, I forgot about that one. So all of a sudden it wasn't in your P&L in the first place. It's completely unexpected, completely unplanned for, and it might be from a historic period which you also completely forgot about as well.
And
So
that's really, really
yeah,
common, especially if you're working in a business with two or three people or more who are out there spending money and they've got the authority to spend on your business's behalf. Now, in that instance, we do find that quite often somebody's agreed to something beforehand, and if that bill's not come in, they haven't remembered, because once they've ordered the service or the goods or whatever it is, that's not their problem.
yeah.
It's somebody else's. And of course, if the billing department or the accounts department don't know it's missing, they don't know to agree for it or to ask for it. So it comes in weeks or months later and it's not known about, and it creates a big dent in A, your cash flow, and B, your profit and loss, which you thought
Yeah.
was good, but now it has taken a hit.
So another key one is, everyone's probably going to be well aware of this one, is paying HMRC. It's one of those ones
Yeah.
where it just absorbs cash very, very fast, especially if we've not planned for it and we've not set any cash aside. So paying HMRC is
Yeah.
a good reason
And
you might have been lower on cash this month.
it's an odd thing, isn't it? We all know if you're VAT registered, you know you have to pay cash. And then when you get to the end of the quarter and it's time to pay that cash, we're all shocked. You know, why have we got to pay that? Oh my God, how much is it? Do I know how much my VAT liability is going to be? And we haven't put that money aside. So if we haven't put that money aside, paying for it and finding that cash flow suddenly gets a lot more difficult.
Yep. So another really key one is when we've physically taken out too much. So we've paid ourselves and we've just taken out
Yeah.
more than perhaps we should have done. Or, well, actually, no, more than the business can afford is the right terminology to use on that one.
And this is the challenge where business owners, and we've all done it, with business owners are using their current account, a bank account in their business, as their personal current account. So they draw what they need without looking at what the business can afford. And if you haven't got up to date management accounts at that point in time, you don't know how much the business can afford. So you just take what you want anyway.
And then outside of the P&L, there's some extra spends which we may have forgotten about. So you may have bought stock, You may have repaid a loan. You may have a credit card which you've just paid off. These won't necessarily sit in your P&L as cost items because they're liabilities. So all of a sudden you look at your P&L and go, I've made a lovely profit this month, but you've repaid a load of debt and you've forgotten about that because it's in your balance sheet. It's hidden out of sight. So that is a really, really crucial one. And another one is if you are looking at your profit and loss and the information simply, it's wrong. Simple as information's out of date, and you might have, say, X months worth of unreconciled transactions in your bank account. You haven't provided all the invoices, you haven't provided all the bills. So you can't actually understand what's happening because there's this big backlog, and it puts you further behind the understanding, because the reality of the situation is when you go and say, okay, I've got all these unreconciled things, I'm coming up to the end of my VAT quarter, I've got to file this tomorrow. I'm gonna post all these transactions. You do this massive backlog, which is a massive time drain, and all of a sudden you see this massive VAT liability and go, how the heck am I going to pay that? Because we've got no preparations, we've got no expectations, because we've been so out of date for so long, and it catches us by surprise. It's a nasty one, that.
It is, but it's really, really common. So
but it's really avoidable.
It is avoidable. So what can we do about that? We harp on quite a lot about keeping your accounts up to date and making sure things are done on time, but it's so important for so many reasons. So the few things that we can do to make sure that we are on top of our cash flow is, number one, make sure you bill on time. Then make sure you keep your bank postings up to date. So as the cash is coming in, make sure that you update your age receivables on a daily basis so that you know exactly who owes you what. If you know exactly who owes you what, you can then chase for that money and collect it sooner. So keep on top of your age receivables. Super, super important. Know who owes you and then collect it.
Now, those two also help with your VAT expectations as well.
Yes.
So even if you haven't done the actual payment side of things, at least you know worst case scenario, I've got all of these invoices and all of these customer payments. So worst case scenarios, I need to prepare for this much VAT.
So I would be putting that cash away into a waterfall account, and as the cash comes in, move the cash away so you can't accidentally spend it, or you can't draw it out without thinking about it, but take that cash in. It may not be the whole 1/6 of that cash that comes in that you need to put away. Maybe you only need to put away 10%. Maybe your average VAT payments are about 10% of your total VAT sales. So have a look at the last couple of VAT quarters and look at the relationship between how much VAT you have to pay out versus how much cash you get in. And then just put, say, 10% aside each time it comes in into a separate VAT savings account so that it never ever hits you as a surprise and you don't have to stress out. Now, VAT is the worst tax to not pay on time. It has the highest fines and penalties, and it gets really, really expensive. So it's always super important to make sure you've got controls over your VAT. Now, of course, you didn't hear it here, but if you pay your PAYE corporation tax a little bit late, you don't get the same fines and penalties. So if you have to choose a tax not to pay, don't make it VAT. Make sure that's paid on time.
So make sure you've got your postings all up to date. And actually, if you need to outsource to a bookkeeper to help you with that, it's worth an investment. Remember, anytime they save you time, and actually, if your records are up to date, you'll be able to plan better.
And we were having that conversation this morning, weren't we, about what we've seen happen. We took on a couple of fairly substantial sized clients last year. And the more time we've released by them offsetting their bookkeeping to us, the more time they've been able to spend in their business, and their profits have massively increased over the last 6 months after they started outsourcing their bookkeeping, because it's just a vanilla admin task. It adds no value to you as the entrepreneur. Get rid of it. Find a local bookkeeper, find a cloud bookkeeper, doesn't matter. Find someone who can do that job so that you can focus on selling and growing your business. Your time is worth far more than the admin cost it takes to do that. And then work out your key KPIs. What do you need to know from your bookkeeper? What do you want them to tell you each week? And it should be, what you're owed, what you owe, the cash in your bank at the moment, and what your liabilities are likely to be, say, for the next week or the next month. We have quite a few clients who literally just have short-term cash planning, which is a week or a month, depending on how often we talk to them. And that's enough for them to keep control of their cash and make sure they never run out.
Yeah. You just need like a little whistle-stop cash flow forecast of some sort, just to say, this is what I'm expected to pay.
You can do quick and dirty ones from the zero accounts, from the data that you can see in your bank. You know what invoices you've got in. you know what invoices are going out, you know the due dates of them, and you can use that to forecast your short-term cash flow.
Yep.
You usually know what your salaries are and how much you need to draw to survive yourself. You know what your loan liabilities are. It's not difficult to put together a little cash flow forecast, but the difference it makes in being able to control it and not run out is enormous. Don't underestimate it.
And monitor your director's loan account if you're a limited company.
Absolutely.
Because that's usually one of the biggest shocks when it comes to the end of the financial year. And people look and they're surprised by how much cash they've physically drawn out. And this might be one of the reasons why you feel a bit cash strapped throughout the year. And the risk is, if you haven't generated enough profit, you end up with different problems because you have an overdrawn director's loan account, which you simply... You can't clear it down with dividends. You get bigger problems. No,
and if you don't keep on top of it, you can't resolve it before year end, and then you get this section 455 tax issue where you get charged a corporation tax charge, like a penalty for being overdrawn.
Yeah.
So one of the most important things to keep an eye on in your business is your director's loan account, which you can only keep on top of if you keep your transactions up to date. Again, so outsource it and make that somebody else's responsibility so that you can focus on growth.
And credit control. Definitely do credit control. Make sure you've got that time set aside to collect that cash in. That's massively important.
So what are our 3 profit hacks for getting control of your cash? So number 1 is to waterfall your cash as it comes in. Then you know you've got enough, your most important liabilities, and you've got enough for you.
So what do we mean by waterfall?
By waterfall, I mean set up 2, 3, 4 bank accounts. You don't need to have too many. You could have one for taxes, or maybe one for taxes, one for corporation tax, one for VAT, one for you, and then you draw out of your current account only and make sure you leave enough for your taxes set aside. So save for your corporation tax, save for your income tax, save for your VAT, and then you don't have those big cash drains. Now, because you've saved that money, it forces you to some degree to not spend money on things you can't afford, or to spend money you're borrowing from your taxes, because you've put it aside to pay your tax.
And remember, there may be small bank fees, but actually people quibble at the bank fees. But the reality of the situation is, even if you pay £5 a month, 60 quid in a year, better than getting a fine, because a fine is a heck of a lot more than that. So just factor that in and actually think
a lot of the
bank fees
savings
worth it
accounts
sometimes.
won't have fees, will they?
There are bank accounts which don't have fees.
So shop around.
Do shop
in fact,
around.
That's another way of controlling your cash, is to have, say, your current account with one bank and your savings accounts with other banks. Make it slightly harder to go and draw that cash out, so that you have to make responsible decisions from the cash that's in your current account.
Out of sight, out of mind.
Yeah, absolutely.
Another profit hack for you guys is to get in control. So numbers are absolutely vital for cash, and because people don't understand numbers, or they shy away from them, often it leads to not understanding cash. So yeah, get in control, bring your accounts up to date, and if you can, forecast various spends. It doesn't need to be anything particularly fancy, but just having a basic level of understanding of this much cash is going out next month is
if
really
you just
important.
knew from today what cash is going out versus what cash is coming in, that would make an enormous difference to the way most people manage their week.
Yeah.
And then finally, cut your cloth accordingly. And it sounds really harsh, but there's only really 2-3 ways to have a look at this. You've either got to make more money, or you've got to spend less money in order to leave more money in your bank. So you have to start making difficult decisions of one against the other, or you end up running out.
Yep.
Now, there is the saying that you can only run out of cash once, and don't let that be you in your business. So take control, stay in control, and get your management accounts up to date. So that's it from us today. We hope you enjoyed our little video here about Dude, Where's My Cash? If you liked it, please let us know. Give us some love across the screen, and we will see you again tomorrow.
Take care.
See you soon. Bye.
Bye.